Hello everybody. So a little bit of a different video today. I want to talk about Hyperliquid strategies. Hyperliquid strategies is a DAT, a digital asset treasury company that owns the Hype token, and the ticker symbol is PURR, P-U-R-R, like hyper, right? PURR, hyper. That's why they picked that ticker. And the subtitle is Hype Designed to Rise, ? And so we're gonna go way out on the risks curve, I suppose. And risk is really when you don't know something, when you don't know a topic. That's what I would define risk. So I've never really discussed the edge of crypto on this channel. But I think there's a big opportunity with Hyperliquid, and so I have to kind of discuss it and talk to you about DeFi just a little bit before we go and talk about PURR. But okay, so Hyperliquid is one of the staking networks that Saylor, as Saylor calls them, and Saylor has talked about it being the future of finance, right? Tokenized stocks is one aspect, but more important than tokenized stocks is perpetual futures. And we know that most of the trading actually on these DeFi platforms take the form of perpetual futures and not necessarily the form of stocks. And what are perpetual futures? They're options that never expire. They're options without an expiry date. And they trade either more or either less based on the expectations. I don't pretend to understand fully perpetual futures. This is a DeFi native way of trading, but I do understand how volume works. And designed to rise, why do I say that hype is designed to rise? It's because the protocol burns the fees. And so the more volume you have on these trading platforms, and in this case, the Hyperliquid trading platform, the more volume there is in the Hyperliquid trading platform, the more fees are generated by the Hyperliquid protocol, and then the buybacks happen. And Hyperliquid buys back 99% worth of the fees. So 99% of the fees go towards buying back the token. And Hyperliquid has been one of the fastest growing DEX platform out there. PURR platform out there, one of the fastest growing. In fact, 2 years ago, this didn't exist. And it's a layer 1 blockchain, which is also something very, very unique. The other PURR platforms tend to be layer 2s built on either Solana or built on Ethereum. Hyperliquid is its own thing. It's its own blockchain built. It's a layer 1 blockchain like Bitcoin. So really briefly, if you're not familiar, one of the chief advantages, of course, of DeFi, and this is what people call degen traders, and this is obviously not the type of trading we do on this channel, but people are attracted to these DeFi platforms like Hyperliquid because of the leverage. So, for example, strategy, you can do 10x leverage strategy, and you can understand why. I don't even like MSTX, right? And MSTX is a 2x, and on my channel I'm like no way, because I'm a long-term investor, so I don't even like, say, a MSTX, right? So what do you think I'm gonna say about a 10x MSTR, right? I'm gonna scream in horror, but the horror can get even worse on these platforms. This. To me, this is more akin to gambling. This is trading on steroids. But for example, you can. This is a screenshot from the Hyperliquid platform. You can adjust your leverage on Bitcoin. Say you want to trade Bitcoin leverage position. You can do 40x leveraged Bitcoin. That means if Bitcoin drops 2.5%, you lose your entire position. You get liquidated. If Bitcoin drops 2.5%. That's what a 40x leverage is. But this platform is called Hyperliquid. Why? Because of the crazy volumes that the platform can facilitate. You can put on a $150 million trade, 40x on Bitcoin. It's crazy when the volatility, it's crazy when you think about this. It's crazy. And the fees generated by these platforms are crazy. And Hyperliquid is different because the fees, 99% of the fee goes towards buying back the Hype token. So this is a pretty big deal if you ask me. So anyways, moving on. Let me continue. This is kind of my first time covering this, but okay. Here's kind of how it works. So let's take Jupiter, for example. So Jupiter, they have their own token, and they burn their own token as well, but they're also built on Solana, right? And if you look at this chart, this is from the Hyperliquid presentation deck. When I look at this chart, what I see is a validation of Solana, and especially validation of Hyperliquid. But you can see, I mean, come on, Uniswap. Back, 5 years ago, Uniswap used to be the thing. Now Uniswap is surrounded by other trading protocols like Jupiter, like Meteora, like Pump Fund, like Hyperliquid. Ethereum is not winning this race. Like Ethereum is kind of like the old. It's not winning this race. Hyperliquid, as far as the speed of growth, and as far as the 99% of the fees are being burned, to me is the winner of this DEX PURR trading platform race. To me, Hyperliquid is the winner. But if you look at how many Solana platforms are out there, this actually also validates Solana. But the problem with Solana is Solana burns only 50% of their fees. Right? So, and that's why, of course, with the staking yield on Solana, if you stake Solana, your yield is going to be 7%. If you stake HYPE, I think the yield on staked HYPE is something like 2%. So much lower yield on staking. Still staking, you still have some staking. But to me, if you look at for 2025, dominant perp DEX on 2025, Hyperliquid was number one in trading volume, number one in open interest, number one in trading fees. And of course, trading fees is what we care about. It's the most performant blockchain with 3 trillion trading volume. And of course, it's a different blockchain from Solana, right? Solana, Ethereum is smart contracts, right? We're not talking exactly about the different thing. Hyperliquid, the power of Hyperliquid is that it's a layer 1 blockchain specifically to trade, specifically for money flows, right? It might be the evolution of finance, where we move away from the New York Stock Exchange and eventually people entirely move to a blockchain for trading all sorts of assets. And the CEO of Hyperliquid, I've listened to maybe five hours worth of interviews of that CEO. He's a very sharp guy. I like it very much, and he explains super interesting things. Like, for example, on Hyperliquid, they have perps on Birkin bag. And you may have heard of a Birkin bag. Birkin bag, they're women's handbags. Very exclusive, very hard to get. You never know when you're going to be offered one. And traders trade Birkin bags. You can trade everything. And so, of course, why does that matter if you invest in the token? Because of the fees. It matters because of the fees. It's all about the fees. It's all about a game where you want to see more trading on whatever, so that those fees are generated, so that there is a buyback of the token, right? And they have HIP4 coming, Hyperliquid Improvement Proposal number 4 coming, with prediction markets coming, with binary options coming. Oh, and by the way, if you have never heard of it, if you wonder what I'm talking about, well, there's a reason, right? Half my viewers are in the United States. You can't access the site from the United States. I tried to access that, keep getting red warning sites. The founder of Hyperliquid is American, Harvard grad. He moved to Singapore to build Hyperliquid. He's based in Singapore because regulation in the US is not allowing that, which is why it's also tough to buy the Hyperliquid token on your own. Even though I know Robinhood has it, but it's just not that easy to buy this token compared to buying a DAT. So that's why I like a DAT. I like a DAT very much on this, because buying a stock is very easy, straightforward. You can understand it. These DATs really bridge DeFi finance to traditional finance. They really make the bridge between the old world and the new world. That's how you make the bridges with these DATs. So anyways, moving on, let's talk about the performance. HYPE plus 120% for this year, for 1 year, last year. The 1 year performance, 12 months performance from May 25 to almost May 26 now, we are plus 120%. If you look at Solana is down 43%. Okay? If you look at Bitcoin over the same period is down 18%. Hype is still up 120%. So the delta has changed. And this is where it gets also particularly interesting. Let me show you this chart. This chart will be very clear. Like you can see that the value of hype goes up as there is liquidity on the platform. So, for example, if you look at Hyperliquid's revenue, the revenue was super, and that's the fees, by the way. If you look at the fees were super high in Q3 2025, right? Lots of trading happening in Q3 2025. You remember 1010? I don't know if 1010 is captured in this, but you may remember 1010. Lots of fees generated on silver. There was a lot of silver trading going on. And of course, whenever you have a lot of trading, you can see in the chart that the value of the hype token goes up whenever you have a lot of trading on the platform. And case in point, actually, we've witnessed some strength in the value of Hyperliquid recently. Why is that? Well, because there were a lot of volume traded on Intel. A few days ago, a lot of traders got into a Intel position on Hyperliquid, and Hyperliquid benefited. So whenever there is a trend, whenever there is an event that a lot of Wall Street wants to get their hands on, but in the DeFi world, they will go on Hyperliquid, and Hyperliquid will generate more fees, which will go to buy back the token. And so that's why I like this token very much. And if you look at also just the structure, of course, Binance and so many platforms control still these exchanges. But if you look at the long term, let me put it forward here. If you look at the performance over the long run, you can see that since 2 years we went from this is the DEX to SEX volume. It was 2% of the volume was on DEX. It was mostly on SEX. Today, the volume and that's probably close to 20% now. By the way, with that sharp of a rise, that's probably close to 20% because this is an old chart, right? This is 6 months old, but already we were showing 15% of the volume had moved to DEX. In the future, how much of the volume is going to be done on decentralized exchanges? Right? Is it going to be half? Is it going to be more than half? Is it going to be most? Right? So there is a secular trend moving the volume away from CEX, like your Binance, like your Coinbase, towards DEX, like Hyperliquid, and like the platforms built on Solana, like a Jupiter, for example. And I suppose a Uniswap. But come on, Uniswap, why have you lost the race? You were first. You're not first anymore, Uniswap. Like, come on. So, anyways, and this, how does it work? This is why you're getting all of these buybacks, deflationary buybacks. And so you can see protocol buyback between January 1st and October 5th for Hype was 640 million. 640 million. By the way, token supply is fixed, at 1 billion Hype tokens. It's designed to go up. These things are designed to go up. They and that's what the CEO of Hype says. They are not equity, but they are equity-like. They have equity-like behavior. The way Hype goes up is very similar to the way Apple stock goes up. If you follow Apple stock, Apple stock goes up thanks to the buybacks, right? Hype is kind of the same way. It goes up thanks to the buybacks that the protocol makes. Bitcoin doesn't work like that. For Bitcoin, where do the fees go? For Bitcoin, the fees go towards the miners who protect the network with a wall of thermodynamic. With thermodynamic energy protects the Bitcoin network. Bitcoin is strong because of its resistance to cyber security attacks, because of the mining network rooted in the laws of thermodynamics to the point that it would be impossible to gather this much energy at one point at one time. That's how Bitcoin works, right? It's protected by a wall of silicon and a wall of energy. Here, they take the fees not to pay the miners. Here, they take the fees to buy back the Hype token, so it's equity-like. It's equity-like. It's also in the way the token PURR, not PURR, in the way it IPO'd, quote unquote, is also extremely interesting. When they launched the token, they gave the token to the users of the platform. Again, we go back to the way business used to be done back in the mutualist era, when we had mutual businesses, where when you banked with a local credit union, you also owned the local credit union. We're going back to this. So this is very similar to, imagine if Facebook in the early days, when Facebook decided to go public in the early days, if instead of decoupling capital from users, what if Facebook had dropped Facebook stocks on the users of Facebook, right? They dropped the Hype token on the users of the Hype network, because the users of the Hype network created that network. So even in the way it went public, the way this token was distributed, the launch, very, very fascinating, very much in line with, I think, the way business is headed and the future of business. You know, if we are talking about protocols, if the future is protocols, these are what a lot of the launches are going to look like. Anyways, trading volume is all about perps, by the way, bigger than spot. So we might move to a world where really people end up trading derivatives much more than they end up trading, actual stocks. People might be more interested in trading derivatives down the road. So anyways, why PURR? That could be one criticism. Why not buy the Hype token? Well, there's a lot of reasons. One of the big reasons, of course, is that on TradFi rail, you can't really use a token as a collateral, right? You can't really do margin on a token on TradFi rails. You can only do that on DeFi rails. So, to me, it's a pro margin behavior to own a stock. So I much prefer to own a stock and grow my theoretical margin stack in case there were to be like a huge crash and I want to draw on it or something. I much rather do that than have a token where I don't get any collateral value, right? If you live in the US traditional financial system, if you own a token, it's like owning a house that can't get financed. It's like owning a house where you can't have a mortgage on top of it, right? They're not as attractive. It's definitely not as attractive. So Hyperliquid solves that problem. They have a really good balance sheet, very low maintenance ratio. I love that very much. Also, depending on how you calculate, they're trading at about 1x MNAV, right? Because they have some deferred tax liability that you gotta recoup or something. So, but if you look at the simple way to calculate, 1.1. So it's roughly trading at a 1. It's not really trading at a premium, not really trading at a discount. It's roughly trading at a 1. And of course, it's a DAT. So what if we get back to a phase of excitement in crypto? This multiple MNAV is going to go up, maybe to a 2, maybe to a 3. And what's going to happen if it goes to a 2 or to a 3? Well, of course, share issuance program in place. They have an ELOC in place. Equity, so they can issue new equity. It's not an ATM, but the ELOC is very similar to an ATM. They can issue new equity if the stock were to go through a phase of hype. And of course, we know, the whole reason why AMC was saved, the whole reason why GameStop was saved is because executives were very smart to raise money during phases of hype. Right? HIMS did that. HIMS doesn't get enough credit for taking that convertible debt back when it was at the peak in May 2025. So they have that program in place. So if we get a phase of hype, they will be able to issue new shares and they'll be able to generate a major yield. Because if this stock traded at 3x NAV, that'd be like selling $100 for 300. So that's point number one. That's why I like a DAT. A DAT generates a yield on the asset by exploiting the inefficiencies of TradFi. What else do I like? I like the backing. Galaxy, Pantera, these are huge names. And look at the leadership. Look at the chairman of the board. Former CEO of Barclays is the chairman of the board. And they have a former board. Well, I'm not as impressed by the Fed, but they have a former board member of the Fed. They have somebody from the New York Stock Exchange. And of course, I find the CEO This guy is very articulate. He explains extremely well. This David guy. He's a huge advocate for hype. Like when I listen to the founder, no offense to the founder, but I don't think the founder of Hype does as good of a job at explaining hype as David. David here does a much better job at explaining hype. So if you're interested in hype, if you want to learn about hype, I recommend listening to any of his interviews more than listening to the interviews of a founder, because the founder is clearly in building mode and he's not in selling mode. David explains really well the hype token, and part of Hyperliquid strategies is just as much having people understand the hype token in the US, where it's less understood, as it is having people understand the DAT system. So thinking of it from an undervaluation standpoint, think about how undervalued this has to be, right? You gotta understand digital assets. You have to understand a digital asset that is outside of the US, that does perpetual futures, which are not very common in the US, which are still heavily dismissed in the US because they were an old dreams from finance professors from 30 years ago, which never realized. So you have all of this FUD to overcome. And then on top of that, you gotta add overcoming the FUD associated with digital asset treasuries company, overcoming the quote-unquote stigma of the DAT crash of 2025. So in my view, this stock has to be heavily undervalued in my view. And I like it very much. So anyways, I understand this video is not going to get a lot of views, but it's okay. Going way out on the risk curve today for BTD, but that's the way I'm doing it today. Hopefully you like the video. If you're a super subscriber of the channel, hopefully you like the video. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.